Hi, everyone. My name is Gautam Gupta. I am one of the partners at M13, and we're going to be joined by several of my partners over the next hour. Just want to welcome everyone to the first time that we're doing this, virtual office hours. Hope to get your feedback afterwards. I'm going to talk a little bit about the format of what we're going to see happen over the next hour, give a little bit of my background, and then we're going to jump right into it. So the format over the next 60 minutes, roughly every 10 minutes or so, we're going to switch to a different partner on the team to cover a different topic. So today we're going to be covering finance, talent, data strategy, digital marketing, and communications. Throughout each section, I'm going to be asking questions of the various partners on the call. They're going to be introducing themselves, but I would encourage you to please ask any question that is on your mind. We want to make this as interactive and as helpful for you as possible. A little bit of background on me and M13 before we get started. M13 is a very unique venture capital firm. The reason I say that is, unlike many other firms, everyone at M13 has been an operator. And I hope that that's going to come through as we go through the backgrounds of everyone on this call. We've all sat in your shoes. We've been through tough times. We know that right now is an incredibly tough time for most entrepreneurs. And we're looking forward to rolling up our sleeves and trying to help out as best we can. My background prior to starting at M13 about a year ago, I was an operator and entrepreneur myself. I started a company called NatureBox, which is a multi-channel brand of snack products. We scaled that business to about $50 million of annual revenue, but along the way made a ton of mistakes. I distinctly remember a time where we were a couple weeks away from running out of cash. The investors had bailed on the company. Our bank had put us in default. And I was basically looking for anyone that would pick up the phone and give me some amount of guidance or some amount of advice on what to do next. And so my hope is that today, some of you that have questions or maybe facing tough situations will get some of that advice from the folks on the call. And so with that, we'll start with Brian Carroll, our partner and head of finance. Brian, if you wouldn't mind just giving a couple minutes of your background, and then we'll jump right into it.
Yeah, absolutely, Gautam. Brian Carroll, I've been COO, CFO role at various startups from as low as 10 up to 400 over the last 10 to 12 years, usually doing finance or ops roles. Similar to Gautam, so I've worked in media, I've worked in SaaS, I've worked in cloud computing, and I've worked in a few advertising and a few others. Similar to Gautam, many times had to do headcount reductions, had to scrimp and save to hit next month's payroll. One of my companies, 6 months, we only had 3 weeks of payroll, 3 weeks of runway. So very familiar with saving money to kind of stretch out and lower burn. Mostly have done venture-backed startups, but I've also done profitable as well. So should I just dig into the questions or?
Yeah, actually, Brian, that's super helpful. Why don't we start the first question? I can see people are putting questions into the box, but I want to just kind of open it up. The question that I'm getting pretty much daily from entrepreneurs and friends of mine is, how do you plan for 2020, given how much has changed and just given how much uncertainty there is in the rest of the year?
Yeah, absolutely, Gautam. So no question, cash is king, runway is king. 24 months of runway is what people are going to want to look at. If you're not getting yourself to Christmas of 2022, I would recommend trying to find a plan that gets you there. If you can, I would make some very pessimistic assumptions about revenue and then start to talk about what your monthly burn would have to be to get you to 24 months, what your monthly burn is now, and then start thinking about the cuts that come between now and then. That doesn't necessarily mean you have to make those cuts. That doesn't necessarily mean that that's going to happen to your revenue, but you need to have that concept in your mind and start getting ready to have a prioritized list of the cuts that you would make and sort of agreement with the stakeholders in your board, stakeholders with your executive team about what that prioritized list might look like. So let me just answer that question real quick. I'm about to do something technical and share my screen. Let's see what happens. Okay.
We'll let you know if it works.
No, it says the host needs to open a seat so that I can share a screen.
Brian, that might not be doable without kicking someone out. So,
all right, okay.
We may have to just follow up on that screen.
Okay, no problem.
Maybe you could paint a word picture.
Yeah, absolutely. So,
sure.
So, Gartner's done a poll of various CFOs and talked about some of the cost reductions that they would make. So, everything from freezing hiring, freezing T&E spend, canceling conferences, delaying CapEx investments, delaying new hire offers, and then, all the way down to potentially doing layoffs, rescinding graduate offers and things like that. So there's a range of things. Definitely the most popular thing so far has been let's freeze hiring, let's freeze T&E spend, let's take a very hard look at the marketing spend that we have, and line those up. But basically what I would recommend is, this would be a lot better with a screen share, but make a table. On the top is revenue, expense, working capital, equity, and debt, and then make a list of the different levers at each of those. So, let's assume that, hey, we're going to have a 50% reduction in new customers. We're going to have our churn increase to 10%. We're maybe going to have our COGS increase. So take all of your sort of negative things on the revenue side and add them up. And then on the expense side, think about just brainstorm a kind of a long list of things you could do on the expense side. Reduce headcount, give people 50% of their bonuses, cancel your co-working contracts, cut T&E. Just make an estimate of what impact that would make on your monthly burn, and make a kind of a long list. And then the same thing on the working capital side. Let's see which suppliers we can pay net 60. Let's assume that bad debt is going to increase, by 8% or something like that. Let's assume that we can renegotiate with certain vendors to improve things. And then on the equity debt side, you could imagine, let's expand the venture debt line. Let's raise a bridge round, sooner, things like that. Basically kind of total all those things up on a monthly burn basis, have that kind of long list handy. And then take that to your executive team, take it to your board and say, hey, here's the options that are in front of us. Let's talk about which of these we should prioritize first when we're thinking about revising the plan.
And so, Brian, on the working capital side of it, a lot of companies are considering venture debt, are looking for just ways to extend runway. What have you been hearing specifically around venture debt? Is that a viable option at this point for companies?
Yeah. So, the rumor on the street is that a lot of the venture debt banks, like Silicon Valley banks and Comerica, have sort of deprioritized taking on new customers, and they're really working on expanding facilities with their existing customer base. Same thing with the venture debt firms like WTI and Triple Point. I've heard that they have been a little more reticent to extend new terms. So everyone's kind of coming to grip with the new reality. So it could be hard, frankly, to get more venture debt if you don't already have an existing relationship. The one exception I've heard is JP Morgan has a new venture lending arm and is starting to take more customers. But it never hurts to reach out, start forming that relationship. Right now, everyone's sort of buried in the Paycheck Protection Program lending. So all bankers everywhere are overwhelmed trying to process that. But that's probably going to kind of work itself out in the next couple of weeks. But for sure, venture debt is a very viable option if you get it. Unless you have less than 12 months of runway, I wouldn't immediately draw down the debt. You want to have that discipline. You don't want to have a false sense of a larger balance sheet security than you do have already. And so I would delay that as you can. But then, of course, also, do what you can to extend maturity dates of existing lines of credit, raise lines of credit, potentially talk to existing insiders about what a bridge round might look like, that kind of thing.
Yeah. And Brian, you talked about the PPP, so I want to go there next. But before we do that, I'm just going to remind everyone the Ask a Question button in the bottom of your screen will let you ask Brian any question that's on your mind. We will be watching and looking for those. But Brian, you mentioned the Paycheck Protection Program. That's something that many startups are thinking about, have questions around. How are you advising companies around PPP and some of the things to be things to consider, as it relates to making that application, the decision to apply, and then who to talk to if you do decide to apply.
Yeah, absolutely. So for those of you who aren't aware, so the Paycheck Protection Program was passed a couple of weeks ago as part of the CARES Act. It's $350 billion designed for small, medium businesses to basically not lay off people. So the intent of the legislation is for employees that are companies that are less than 500 employees who are very adversely affected by the current economic situation, and maybe their revenues have crashed, maybe whatever would cause them to do layoffs in the next 2-3 months, to not do those layoffs. So effectively, there are a few aspects of the program. Generally speaking, you have to have less than 500 employees, and that can trip some venture-backed startups up, and I'll tell you why in a second. The second is you'd have to have adverse economic circumstances that might make you lay off people. So if you were to, so basically what the program does is it gives you up to 2.5 times your payroll, your monthly payroll, up to $10 million with a salary cap of $100K per employee. And then it gives it to you as a loan, and essentially the loan will be forgiven in some period of time if you haven't laid off anyone during that period of time. So I don't know if people will just wait till July to do all their layoffs, but at least don't take the money and then proceed to do the layoffs anyway. The loan won't be forgiven. You'll still owe the loan. But there is a nuance for venture-backed startups, and the nuance is this. If you have any investors with more than 50% of your equity ownership in your business, you would be considered an affiliate of that business, and all of their employee base would also be counted against your 550 or your 500 employee limit. The other thing, though, is if you have the other threshold is 20%. So if you have owners with less than 20%, but negative covenants against your business, which effectively is like the ability to vote on your budget, the ability to hire and fire executives, the ability to take on debt or issue dividends, all those things would be considered to be a controlling covenant. And so even if they owe less than 20% of your equity, they could still be considered to be an owner, which means that a lot of companies will find them that are venture-backed will find themselves pooled with all the employee base of all the other companies in the in your venture partners portfolio, and so you have to be pretty careful about it.
Cool.
Yeah.
And Brian, there's a question that kind of came in here that I'm just going to paraphrase and kind of expand on it. But are you seeing, and I may chime in on this too, are you seeing the appetite to invest change across VC firms and angels? So, I guess maybe the other way to phrase that question is, what do you foresee going back to working capital? We talked about venture debt. What do you foresee as kind of the opportunities and challenges of raising equity capital over the next 3 months?
Yeah. So, I lived through the .com downturn. I lived through the housing bust in 2008. Universally, everyone wants to take a breath, take stock of where things are, and be very cautious about taking on new relationships, new obligations. And so I think, everyone from hiring to venture capital firms are going to do that. Definitely venture capital firms are working with their own portfolio companies very strongly right now. And so I think you're going to see definitely things slow down. Now that doesn't mean that deals won't get done, but the bar will be raised across the board on everything. But Gautam, this is really more your, so you should probably chime in on this.
No. I think that's totally right. I mean, I think there's definitely been a slowdown already, and I assume that is only going to continue. And so, I think what you said is absolutely right. I am just going to read this next question here.
Actually, while you're reading that, let me throw in one more thing about the PPP program. So it just opened Friday. SVB just opened its application yesterday. The website's been crashed, but a very important thing to know about it is it is first come, first serve, which means that that 350 billion could be exhausted. Some people are saying as early as late April. So I do recommend moving quickly if you want to participate. And the way to do that is to reach out to your existing lenders, existing bank relationships, if you can.
Awesome. I'm also reading the very active chat that we have going on. Runway is the new cool look, along with bootstrapping. I couldn't agree more. So this question, we'll kind of end, Brian, on this question and then move to Matt. But Will asked us, as a self-funded venture builder studio that is not a VC model, what are some ways to raise funding for this type of model to allow us to support our entrepreneurs? And what would some of those typical sources of funding be? So, M13 has a launch pad where we help incubate companies as well. And so, maybe to make the question more broad, if we weren't a venture capital fund, how would we be thinking about funding, companies like those that are in the Launchpad and other businesses who may have just different needs than your typical technology venture-backed company?
Yeah, I mean, revenue is the best. Obviously, whatever you can do, get the revenue, get customers who will sign on in advance. I think the main thing is, I think a lot of people are looking to, be a little more conservative about taking on new projects, and so you should just assume that sales cycles will lengthen, fundraising cycles will lengthen, debt collection will lengthen. So everything's going to take a little longer and be a little harder for the foreseeable future. But I don't think that the rules of the game will have fundamentally changed. I think, equity investors will still be equity investors. It'll just be a little harder to woo them. The bars will be higher. And, to whatever extent you can keep your burn very low and rely on real revenue, ideally, you're selling customers and getting them to prepay some amount of money for, a discount. That's the best thing, in business as in life.
Cool. Okay, great. Matt, I'm going to turn to you and just kind of change the gears here and talk about talent. Before we get into some of the questions, would love for you to just give an intro and then we can jump in.
Yep. Thanks, Gautam. So I am Matt Hoffman. I'm a partner here as well, head of talent. My background is also primary operationally, working previously in two relatively large-scale, high-growth startups, grew to several hundred people from less than 100 both times, both in the technology sector, both New York based. So I have some experience with kind of rapid growth organizations on the startup side. Prior to that, I did something very different. I worked in large organizations leading talent, and a lot of my experience there was through some economic downturns and some cycles. So I have a little bit of experience with both rapid growth as well as contracting organizations, and hopefully that'll be helpful context for this conversation.
Thanks, Matt. And so I want to jump into one question that actually was asked, just by the group listening. Given that some great companies have sprung out of past recessions, you've certainly sat and lived through that. How can companies being founded now best position themselves for future fundraising? And so I'd love to just hear from your standpoint. Obviously this question, has to do with fundraising, but I think it really also goes to talent, right? Which is, how do you position,
Totally.
Yeah.
How do you be opportunistic?
So maybe
right?
we can start there.
How do you be opportunistic? I think it's a great place to start. It's a great question, and that's absolutely true. I think what's kind of precarious and uncertain times is it changes for people who are interested in joining different type of companies, right? If so much of what traditionally would feel like a safe option is uncertain, what feels like a very unsafe option, the difference isn't there, and so the cost benefit profile, the risk profile changes, and so that's why you're seeing people who might be more likely to stay with a comfortable role or in the past create these opportunities because that may be the best opportunity for them and they're willing to take that risk in uncertain times. And so that does a couple of things. It actually creates much more of an environment where amazing entrepreneurial talent have the time and space to come up with ideas. And anytime the world changes, right? Anytime what you thought was true is no longer true, that creates an incredible opportunity for new business and new products to fit the new world, right? And so it's not a surprise that when the world paradigm changes, new solutions iterate. And it's certainly not a surprise that when things are more risky and uncertainty, that amazing talent are more opportunistic about taking higher risk, traditionally higher risk things like working in startups. So if you are in an early stage company and you are in the position to hire, it's an incredible time to be opportunistic. And I don't mean to minimize a very real loss that people who are facing job uncertainty or job loss face. It's incredibly traumatic, right? And I don't mean to minimize that in any way. But the fact that there is an abundance of talent and you know, sadly for many people, opportunistically for others, the balance has very, very quickly shifted from what was an employee favorable job market to an employer favorable market. That changes things. And so you do have the opportunity to bring in different types of talent that might not normally be available just because they don't have those choices. And so it's a chance to kind of take a little bit more risk and try things differently because there's not candidly that much to lose on some of the other sides of things.
Yeah. And, you know, Matt, one of the questions that we've been getting and we've even talked about internally is performance management, right? So today we live in a remote world, right? And, you know, the hours, already companies that had flexible hours, the hours are even more flexible, right? And, you know, for some folks, that means you're constantly working for, you know, and there's never an end. But how do you think about performance management and also just, you know, employee satisfaction and happiness in the workplace, given all of the changes that have occurred as we've moved towards a remote environment?
Yeah, it's a question that I hear so many from some of our own portfolio companies and then people I talk to is like, how can I manage performance effectively given everything what's going on in the world? And what's interesting about times like these is like we talked about before, it's a chance to kind of reset expectations and re-examine old, maybe no longer operative assumptions about how the world works, right? And you know, for people who thought that performance meant how early you get into the office and how early you leave and butts and seats type of approach, like I don't know that ever worked, but it's more clear than ever that that's not the way to kind of manage your team. And I think one of the things that will change with this new paradigm shift is the way that we think more progressively and more powerfully about performance and performance management. It's not just about where you are and what you're doing. It's about the quality of your output and the quality of your performance and your connections and the product that you're creating, the service that you're providing. And so the things that we know are true about driving performance, setting really clear goals, giving really clear feedback on a regular basis, constant cycles of communication and agile check-in. Those things are actually even more important now, right? Because you don't have the being on top of someone. You have to trust that you're giving really clear direction. They're going to be doing it asynchronously. They're going to do that. It's okay to give people that space in an environment where there's so much going on and people have so many things that, you know, 3 months ago were not even something they would even think about during the working day. It actually forces managers and leaders in really good organizations to get better at giving clear goals and setting good feedback. That's the best way to manage performance. And the companies that get really good at that really quickly will have an incredible advantage at companies that are trying to operate in a 2019 model in a 2020 world that has no relationship whatsoever in any way to that. And that's one of the things we're trying to help as well with.
Cool, and you know, just to kind of put the point on it, and I'm going to remind everyone: ask a question, please. Matt would love to answer anything on your mind, but just to put a point on it, Matt, how when you're talking to founders, thinking about reviews, annual review cycles, you know, things like that, what's been your guidance?
I think feedback is more important than ever, right? More quicker. I would not actually recommend that companies do annual review cycles. If you think about kind of the idea behind it, and we can just imagine any one of the people on this call or in the audience's companies, imagine trying to judge people in December 20 on goals and metrics that you had in place in January 2020. Like, it would be insane, right? The world changes so quickly, and our ability to predict even 3 weeks in advance, let alone 3 months, is drastically changed. So having a long-term cycle is not a helpful approach for companies that are growing and adjusting and want to be adaptive and agile. What I recommend people is, it's incredibly important to set priorities, right? OKRs that set priorities and people know what's most important at a time where connection is decreased and remote, incredibly important for alignment. You have to help set priorities because there's a million fires people want to put out. So setting goals and OKRs is incredibly important. Giving feedback on a regular basis, incredibly, incredibly important. More important than ever because they're not going to get all those nonverbal things that you normally get. But these long-term annual cycles are not going to help you at this point. You have to get better at giving it more quickly, more agilely, and more candidly.
Cool. Matt, I'm going to let you go in one. We got one question here from the audience, so I'm going to cover that, and then we'll switch gears. But speaking about asynchronous communications, do we think that this will stick as a means of internal communication? In a remote world, it works, but is it more about general constant communication or the specific way of communicating across the org? So I think, just to paraphrase, today organizations are living in Slack, and just other communication tools that maybe weren't as prevalent even months ago as they are now. Do you think that that is a fundamental new behavior, or one? And then two, do you think that this changes any of the communicating side of operating systems for companies?
I think everything has to change, and it will. I don't think it will drastically shift as much as people are expecting. I think it will accelerate an evolutionary shift that's already been happening. Certainly in my last company, we were primarily distributed already for lots of good reasons around access to talent and other things around kind of support and timelines. What I predict, and again, just going back to the idea that I or anyone else can predict the future at this point is not likely, so take it with a grain of salt. I think people will recognize, people who are very afraid of remote working will recognize that you can get stuff done. And I think companies will see an increase in flexibility and accommodation about that, which will create greater access to talent and also create greater engagement when employees are able to kind of manage their work-life balance more flexibly. I do think, and I can speak from an N of one, that when we come out of this, we'll find ourselves more craving of human interaction than less, right? And so my prediction is, especially if social distancing becomes at least a new normal for the short term, there'll be a lot more flexibility in the workplace where there will be more opportunities, and people want those opportunities for in-person conversations when they happen, but they'll be more accommodating and better equipped to handle remote conversations as well. So I expect there'll be more flexibility about when people are in the office. I think there'll be more flexibility about where offices are in terms of workplace platforms. But I think people will be craving those interactions even more, and they will become more meaningful, right? So the stuff that's really important around relationship building, getting to know people as fellow human beings, critical communications, hard conversations, negotiations, we will double down on those because we know how important those real life experiences are. But for the everyday, I think there'll be more accommodation for remote work, and I think it's a really good and healthy balance.
Okay, Matt, I lied. There's one more question that I'm going to ask you about, because I think this is a really important one on consultants. So, look, every company is, Brian talked about, they're looking at that list of, how do you reduce expenses? What are the levers? Would love to hear your perspective on how do you think about, non-full-time employees? Do you push the model more towards that and use the flexibility and...
I do think so, right? If you are a consultant, which I'm assuming the person who asked the question is, and you have already developed the skills in the network, I think it is an opportunistic time for you. I think because of potential long-term uncertainty, companies are going to be less likely, and Brian was talking about this, to kind of commit to long-term employee relations if they're unsure about what the future holds. And so bringing in consultants who have that expertise and can kind of come in and work on a short-term project, because you know what your short-term needs are. You probably don't necessarily know what your long-term needs are yet. And so that's an opportunity for consultants to come in. I think that model will accelerate and shift as well. there's tons of things that as a society we need to kind of wrestle with in terms of the long-term implications of gig workers and consultants and things like that. I think that is a model that's likely to be accelerated as well. But I would encourage companies to consider where they can bring in consultants to solve short-term issues. I think that creates less of a burden long-term. And if you have the ability to be a consultant and you have a specific skill, I think you should look for ways where you can solve specific problems for companies and talk to them about that. I think it's a really good opportunity for you as well.
Cool. Okay, great. Brian, Matt, I'm going to let you guys go so that we can move on to Rob, Christine, and Lizzie. Thank you so much. And just give us 1 minute while we get a couple more people on the screen. All right, one more here. Sorry, guys. We're a little limited by technology. All right, good stuff. Lizzie is probably going to join us in a second here. Okay. Great, we got everyone. Great, so Rob, why don't we start with you? If you can just give a little of your background, and then I've got a couple questions that we can jump into.
Great. Hi, everyone. Rob Olson, partner here at M13, head of data strategy. My background is also on the operational side, so initially heavily in the weeds with large-scale data sets, sitting with consumer marketing teams at big pharma, understanding consumer behavior on the patient side, efficacy of their online, offline marketing tactics. Then I worked with a bunch of different performance marketing heavy brands, spending heavily on direct response TV, direct to consumer online. Worked with them to integrate disparate data sets across marketing operations, call center, support team, sales team, to have a more holistic view of their business. And then most recently spent almost 6 years at DigitalOcean here in New York as an early employee, building out central data capability organization that worked across the business with every other operational team to basically build, maintain a single source of truth, encapsulating sort of all the data generated by our business and our customer base for our pretty highly complex product offering, as well as some predictive capabilities on the data science side, and an insights team that partnered to work on evaluating new business cases for investment.
So, Rob, you just mentioned predictive capabilities, and we are living in a time where arguably no one could have predicted what we're going through right now. I would love to hear your perspective on every entrepreneur's 2020 plan just got thrown out the window. And everyone is looking for, how do I get insights on my business faster? How do you think about that? What are some of the things that some of the founders or entrepreneurs should be thinking about as it relates to just getting up to speed on how their business is changing?
Yeah, absolutely. I mean, one thing's clear: this is a time of uncertainty, a lot of unknowns, and a lot of the data you've gathered on your business is less reliable or completely unreliable at predicting what's going to happen today, tomorrow, probably the next few months, if not longer. But I do think it's important to sit back and think about the difference between fundamental changes that are being driven in your customer base, in their behavior, versus some short-term nuances that you need to react to around the who and the how of your customer base and how they're consuming your products. One thing I'll say is, with so many unknowns, I think it's important to spend time really focusing inward on your business and listing out sort of what you do know and what you do believe. And then sort of at the same time asking, what do I have control over? There are a lot of unknowns that you really have no ability to answer. And there are a lot of knowns, similarly, that you have no ability to impact. So focusing on those unknowns where you can gather some information, and focusing on knowns that are more flexible, that you have levers that can actually change things. So thinking about your core metrics that are driving your business model, the different customer segments and products within that, and thinking through how much is really known and unknown about those dynamics at play, and listing out sort of what you believe you have control over, what can you actually do about it, what decisions can you actually make. So in terms of getting insights faster, whether it's what will happen to my cohorts, I don't have 12 months to figure out customer profitability. You really need to zoom in the microscope during this time and dive into the weeds a little bit. It's no longer about monthly cohorts. You need to be thinking in daily cohorts, weekly cohorts, and comparing sort of early signals of your customers during this crisis to those in the pre-crisis world. Making sure you understand what your customers traditionally do in their first session, their first purchase, that first week of activity, and comparing apples to apples about what that customer and that early behavior looks like now versus what it looked like before. Where are they coming from? How are they digesting data and information when they first are, in the consideration phase? And I think, if you're on a smaller team, it's really on everyone as a part of a founding team to build that story for themselves, digging into the weeds and really tracing individual customers across all of the different data sets you have on them, whether it's how they came in, what they viewed on the site, how they first, what they purchased, any sort of questions they asked from your support team, and building that story and that narrative about what's happening in those first hours, days, and weeks for your customer base, so you can start to question and push on that story with any anecdotal evidence you're getting by looking at those customers. Are they following your assumptions? Are they behaving as you had believed customers should behave prior to this crisis? Or really where you're going to find some interesting insights, or what odd behaviors are you noticing that are cropping up for the first time? That when you're diving into the weeds, you're seeing things that are just strange and that you really have to grapple with. How do I explain this new behavior?
And Rob, to that point, what are you seeing in terms of companies prioritizing certain KPIs? Has there been a shift? We often talk about a shift towards profitability, thinking about customer economics. Have you seen that shift play out? If so, what are some of the KPIs that you're advising founding teams to have their eye on?
Yeah. So I think right now there are businesses that fall on all ends of the spectrum right now, whether they have been massively sort of put on pause, they have no new revenue, no new acquisition, no new customers, versus those who may be opportunistically able to actually accelerate growth right now. So if you're in the case where you've got pretty strong headwinds against you in terms of growing your user base right now, I think it's really important to look into the behaviors that are driving some of your most successful customers historically. If you're on a recurring revenue type of business, or have a platform where people are continually contributing, thinking about the different types of behaviors that lead to and then continue to sustain your super users, and what the profile and the data points really look like for your top 10, 20% of customers. Because gaining that understanding and really trying to derive, whether it's upsell revenue, whether it's referral revenue, or just higher levels of engagement from those top super users, that is going to help sustain sort of this life heartbeat of your business and the engagement, while you may not be able to bring in any new customers. On the flip side, if you're really trying to ramp up and you have some tailwinds helping you out during this crisis, again, thinking about how do I double down and spend on acquisition channels that typically tend to maybe have a higher cost per acquisition, but tend to drive those super users, and really doubling down on saying, how am I going to come out of this crisis with a more solidified top 10, 20% of users that are highly profitable, that sort of pay dividends in the ways that they drive a network effect or a referral effect for your business, rather than focusing on the long tail and traditionally sort of the lower quality, lower spend, fine ROI, but low CAC, low LTV type channels.
Cool. And Rob, one question there that I often get from entrepreneurs is, now more than ever, you have to be cost effective and, mindful of costs. And, a lot of the BI platforms that are out there and tools are not exactly cheap. And so one question I would have for you is, what are the tools or resources that you would turn to, knowing that you gotta, get these insights, but it has to be done in a cost efficient way?
Yeah, it totally depends on obviously the scale of your business, how complex your business is from a data perspective. If you're using off-the-shelf tools to run, an e-commerce store, a lot of the, reporting solutions that are available there are going to get you a lot of the high-level numbers. But at the end of the day, if you're part of a small team, digging into the source data and getting access to the ability to drill down to a single customer and look at all of the data points that customer is generating, as they progress, is going to yield a lot of sort of qualitative, I'll say qualitative insight, but I mean N=1 quantitative insight. You can view data and gain a lot of insight through looking at smaller scale data and trying to interpret during this sort of time of unknowns, what am I seeing here? What is this behavior? A lot of teams that do have really expensive BI software set up to track all their metrics may be essentially glossing over and not honing in on some of the underlying behavioral changes that are going to take a few months to really pop up in the top line numbers. So I think, again, getting into the weeds and, whether it's pulling exports of the raw data and sort of looking at them, customer by customer, if you don't have the ability to go out and sort of, or if you don't have anyone in-house who's sort of a data analyst who can look for sort of top decile or top 1% of customers across different attributes that can start to signal, hey, this is an odd behavior, or hey, this is something we haven't seen before, or someone who's doing something really weird. Hey, I have a customer, if our average SKU count is people check out with 3 things in their basket, but we've had 4 people check out with over 200 items in their basket. That's never happened before. Look at those customers. Maybe even email them and ask them, I'm trying to gather information about what it is you're doing and understand how I might be able to act on that information.
Cool. So it sounds like pivot tables are your friend, and if you're nice
Scrappy
enough, Rob, he'll throw in some free consulting. So
right.
Okay, cool. So Lizzie, I want to transition and talk about digital marketing. If you could just start with your background, that'd be great.
Hey, good afternoon, everybody. I'm Lizzie Francis, and I'm an operating partner here at M13. And my work experience has been primarily at consumer technology companies, Gilt Group, Goat Group, and Textile Fashion, amongst others. And I've run operations and marketing programs to drive early to mid-stage growth.
Cool. So, Lizzie, this is a pretty interesting environment that many folks probably have not been a part of. New founders, recent entrepreneurs. You finally have an ecosystem where Facebook may be cheaper this month than last month in terms of CPMs. And so I just want to start with how do you balance sort of offense versus defense, given that the constraints around many digital businesses have really changed quite quickly as it relates to marketing and customer acquisition?
Yeah, and great call out. I mean, what we're seeing is that actually CPMs are depressing. So they're becoming more affordable as advertisers pull out and people are increasingly online. I mean, look, you can't control these macro impacts to consumer behaviors. So what you can go on the offense is a customer experience and thinking through actually your acquisition and conversion funnels and evaluating, what can I impact that could positively improve those metrics through the funnel. And so my advice would be to take a look at your return policies, your refund policies, perhaps expand customer service hours. If you're like me, you're tracking every package because you care more than ever about when things will arrive. Look at your shipping fees and your guarantees around returns and what those policies should look like. Those are the things you can absolutely control. And you need a test plan to think about all of the things that will really truly drive demand in this moment. And I would say invest, if you are at scale, invest some of that margin into those things. Follow Rob's advice for sure, and look at leading indicators on your paid acquisition. Understand if your test plan and your hypotheses are actually coming to fruition. And I would think about all those things as you're putting your marketing strategy to play over the next few weeks. I'm guessing many of you, it is day to day you're thinking about it. And for those where you can map it out over the next few weeks, I would really think through your test plans and be nimble and quick, particularly with regards to the areas of your business that you can control.
And so let's talk about something, Rob brought up the aspect of doubling down on existing customers, something I would call, your whales, right? You've got these customers that spend a ton of money with you. How do you double down on them? What have you seen work in terms of doubling down on these, potentially highly valuable customers?
Yeah, it's a great call out. And if for those of you who, even with small cohorts or small customer bases, look, you've already spent your money on these customers to acquire them. They've already interacted with your brand. This is where you want to actually think, how can I keep them loyal and engaged with the brand? I love today, I'm sure many of you saw the headline that Allstate Insurance actually decided to drop their premiums by 15%. I mean, this is not necessarily to drive share shift in this moment. What this really is actually a move to reward policyholders and keep their customer satisfaction high as they look at the macro environment with fewer people driving, right? So to me, that's a big company example of something that can be done even at a small scale. Rob brought up a great point. Call your customers. I mean, my goodness, there's never been a better time to actually have that multi-way dialogue with your customers and think about, how do you keep them loyal, engaged? Do you need to change your return policies? Do you want to understand how they can help influence product development over the next 4 to 12 months? What do they want more or less of? So really think about where you've actually already invested and try to create that bespoke experience, even if it's small, and then think about how to scale it over time, because they will be so critical to driving your revenue over the next few weeks and months. And I think, frankly, customers enjoy this. They enjoy having dialogue with brands they love. That's part of what direct-to-consumer and what brands now understand matters. Customers can have this multi-way dialogue. It's not just a tops-down experience. So I think customers, particularly in this moment, would appreciate that.
Well, I'm certainly hoping Geico follows Allstate's example and I get 15% off. So should you be testing right now? And if so, how do you think about a test budget, right? The go-go days of raising venture money every 6 to 12 months are likely gone. So where is that test budget going to come from?
Yeah, I mean, I've always had, for those who know me, this philosophy, this 70-30 rule, which is 70% should be on things and 30% should always be, innovate, ideate, test, and think aggressively about beating yourself essentially and innovating against yourself. And then I think as times call for offense or defense, as we've mentioned, you move up and down, maybe it's 90-10, maybe it's 40-60. I think this is one of those moments where you need to ruthlessly test. And I think to Rob's point, look at leading indicators. You may not be at statistical significance or however you've defined statistical significance for your organization at this point, but you really need to look at those leading indicators and then ruthlessly kill tests or experiments that aren't working and frankly may prove your own hypotheses wrong. I think in terms of prioritizing where to test, the no-brainer here is you should be investing in things that drive revenue and sales, right? And likewise at the top of the funnel. And likewise, you should be investing in things like great loyal customers because they will continue to drive recurring revenue for you and will become more loyal to the brand undoubtedly if you think about investing in tests that will make them loyal. And so I think we're also going to find, this is an unknown time for all of us. For those of us who went through 2008, I think we all remember that these incredible arbitrage opportunities happened, and great partnerships came together as people collided in the marketplace. So I think we can expect to see some of these opportunities unfold. I would recommend that people just stay on top of what's happening in the pipeline, network, and really understand where it is that they can be testing. My last piece of advice is I just sort of told everyone to throw everything in the kitchen sink. But the reality is, because you're going to be ruthlessly prioritizing, you need to be particularly crisp with your test hypotheses, right? So as you run these experiments, just make sure that you are crisp around what you're testing and think about what are things that will truly drive revenue or learnings within your organization that can then be doubled down on over time.
Cool. Okay, Christine, our closer. We'll start with your background and go from there.
Okay, thanks, Gautam. Thanks, Lizzie. Hey,
Christine,
Rob.
you might be on mute. Okay.
Can you hear me?
No, you're good now.
Okay, awesome. Excited to be here. I'm sitting here in Brooklyn, and I'm very grateful for the sunshine. I spent the last dozen years or so working with Richard Branson and Virgin Group to launch Virgin branded businesses in North America. I was also the head of communications for Virgin Galactic, which is the world's first commercial space line. We had some dramatic highs and also some tragic lows, and I was there for key moments that helped me cut my teeth in both brand building and also crisis management. Before then, I was a social entrepreneur. Before that term was even coined, I helped launch Teach for America and also the KIPP schools.
Hey, Christine, it sounds like, okay, some folks may be having a tough time with the audio, but I think I could hear you. So okay. Why don't we keep going? And if we hear more about that, we'll troubleshoot again. The question I think I want to talk about for a few minutes here is, every company has sent out a COVID-19 email. If you are advising a CEO, should they be sending out that COVID-19 email? How should they be communicating with customers? What is your general advice around communications in a kind of uncertain time like this?
Yeah, that's a really good question, and I'm sure, like you, my inbox is flooded with emails from my favorite brands. What I think is really important to ask first before anything else, before deciding should I communicate with my customers, is what are we doing? What is our company doing for customers and for our partners and our community right now that's positively contributing to their lives? Every single person is being impacted by COVID. So what you do now to participate can ensure two things, right? One is you are not going to be tone deaf when you're communicating with your stakeholders because you're engaged, you know what's going on. Secondly, you're going to show your true character as a brand that adds value to your customers' lives. I've seen that on bad days, the company's true character really gets exposed. And so you want to lead with your best foot, and that is by being an engaged contributor, positive contributor to your community. So while you're running your day-to-day operations, think through and ask your employees to help you understand, what are you uniquely suited to do to engage in problem solving? Are you partnering up with local organizations to help the medical community, frontline workers? Are you finding ways for your customers as well as your staff to help local businesses keep their doors open? What are area schools doing that you could possibly help with? So I think being creative in that way first allows you to create a story around your own brand and find ways to obviously be useful to your customers and your stakeholders. I think that expression of your brand will result naturally in stories that will bolster your employees and also inspire your customers and create stories that they will want to hear. I'm not saying proactively brag about a few things that you're doing, but first demonstrate the values of your brand, and then you will find relevant storylines and meaningful things to talk about.
Yeah, that's great. I love that. Let me ask you about internal communications. So what is your advice to CEOs looking to find connection with their workforce, especially companies that have multiple offices? I mean, does the playbook or does the thinking around internal comms change?
I think that's a really good question. And to echo some of the things that Matt said, right now, people are working from home who are not equipped to work from home. And so I think to try to over communicate and reach out to people that may be quiet in Zoom, just ping them and check in with them, and also share what's going on in your own life. That BBC dad famously had those kids. I mean, it was an accident, but it was so naturally engaging and heartwarming, and also just very real. Like, we're all dealing with stuff in the background. So to not hide from that, I think, again, it's a reflection of your true personality and the fact that you're being authentic and you're showing up for your team. So I would say over communicate, but do it in not a fake saccharine way, but do it in a really honest and open way. I will say that people are struggling with pain. And so if you have something that can alleviate that, then launch it, launch that brand, launch that product, launch that blog, do whatever it is. Don't wait. And also share moments of levity and humanness, because we could all use a laugh.
And Christina, one last question, but you worked for a brand that has such an incredible voice, right? Many of the brands that we work with have their own brand voice, and sometimes that brand voice is whimsical and fun and it's different. Is now a time where you have to be thoughtful about your brand's voice? Do you have to change that voice? Like, how do you think about that, especially coming from a place that was unapologetically unique?
I think that within all of our brands, there is a place for seriousness. There is a place for genuine reflection. And so as whimsical or as brash or as rough as your voice may be and your brand may be, I think it's really important to be very focused on telling the truth and being transparent. So I would seek to find a kind of balance, because not everything is going to work tonally if you're one extreme or the other. I think showing that authenticity is really important. I also think that when you're dealing with a crisis and you're about to share bad news, or if you think something is not going to go well, start to map out like how you're going to start sharing this information with your stakeholders, because they don't want to be caught on their back foot. They don't want to be in the dark. And so that means you're going to have to be real and serious and show that you might not have all the answers, but you know what processes you're going to take in order to get the answers to your stakeholders. And that requires a certain level of seriousness.
Cool. Thank you. Okay, we're going to wrap up here. I just want to thank, on behalf of everyone at M13, want to thank everyone that attended. Thank you to Matt, Brian, Rob, Lizzie, Christine, for sharing all of the thoughts. And just as a reminder, everyone that did attend is going to be getting a video recording of the webinar, and then also a survey, just to give us any feedback that you might have. And we would really appreciate you responding to that. And if you do have any questions that we didn't get to today, please do reach out. It's a tough time in the world. We are here to help, regardless of whether we have met you yet or not. We would love to just help and make new friends in this ecosystem. So please do reach out.